Hey everybody, welcome to this week's NASDAQ Dorsey Right podcast, Thursday, February 22nd. Miles across the table from me. This is Will, as you can tell by my boyish monotone voice. We have a lot of good stuff to talk about. Obviously, NVIDIA, I think, is kind of the elephant of the week that we'll get to. Talk about some other stocks getting added to the Dow, kicked out of the Dow, some cap weight, equal weight stuff that everyone seems to be screaming about. I've talked to so many people about that. But starting with NVIDIA, just to set the stage, beat fundamental analyst expectations on Thursday, top and bottom line, stocks up 14%. Miles, if you were to guess NVIDIA's trailing performance, we'll start year to date. We're going to go over or under. Over or under 20.
So I can see it. So I know the
No.
answer.
All right, what about 1 year? 1 year.
1 year
Over or under 150.
Yeah, I mean it's got to be it's got to be over.
It's
right?
over.
Yeah, it's got to
So
be
220. 227%.
Pretty close. I did not look that up. I did not know that. I guess I'm just that good.
That was shockingly good. Okay.
Yeah.
3 year. NVIDIA,
goodness.
NVIDIA trailing price return. Not that it kicks off much of a yield, but a 3 year trailing price return for NVIDIA over or under 275%.
Man, I don't know if you're using reverse psychology now. You're trying to go a little bit too high. I'd
Make a
say
guess.
that's still too low.
Yeah,
I might
right.
say it's 330 or something.
Oh my gosh. All right, 352.
352.
You're pretty good. All
Yeah.
right, last one. Rolling 5 year price return for NVIDIA. Over or under 1,500%.
All right, come on. It can't be. Is it? Yes. Man, this really did move. I'll go with under. I'll go with 1328. Let's say
1633.
Oh my goodness, really?
That was pretty good. Yeah. All right. NVIDIA is up 1,633% on a rolling 5 year return.
Moment of silence for that.
Come on. Talk about momentum and trend following at so many points in the past 5 years. How many times do you think consensus was all right, this is over? Stocks run its course, it's overvalued. We're done with it. And there were plenty of corrections in there. Don't get me wrong. It's a volatile name, but that just goes to show that trends can go on much, much longer than you would ever expect.
Yeah, this is the epitome of the one, right?
Yeah.
I mean, you're looking at
in our investing career, maybe so. Yeah.
Yes, I mean you're looking at classic momentum is just cutting your losers short every single time. We've had a lot of losers, right? 2023 was rough.
Yeah.
We're going to talk about momentum kind of picking up a little bit throughout the pod today, but we've had a lot of losers. And then it all kind of turns around. It's all built on the one.
Yeah.
Right. And so you have something that's up over the course of the last year, 300, whatever. You're eating. Momentum eats when you have your 100x or 200, 300x.
Yeah. I mean, very few investment factors will take a return like that.
Right.
Very, very few investment factors will give you exposure to a 100%, 200%, 3, 4, 500% return stock without at some point saying the quality's gone down, dividend yield, forget that.
Right.
Value, it's not a good valuation, whatever it may be, whatever factor you want to use. Very few stocks will hold on to something or very few factors will hold on to something for that long. And what Miles is getting at is momentum will ride something like this, that right tail event, as far as absolutely possible before getting out.
Yeah. And this is when it's very hard, right? I mean, we're the topic for today, right? Core driven market, cap weighted stuff is dominating. You have NVIDIA, the kind of catalyst for all of this growth that's up another 15%. It's hard to sit there and say, hey, this is still a buy.
Yeah.
Right. It's not easy to say that. And yeah, it's way overbought. It's been way overbought for quite some time now. That just is what it is.
It is what it is.
It's still strong. Right. That's what momentum lives on.
Yeah. And there's clearly been demand for the stock because we always forget, how do prices go up? There's more buyers and sellers. There's more demand than supply for a stock. And you can say the same thing about, of course, asset classes, sectors, and so forth. Something too about it being hard is I think you're getting at the investor behavior and investor psychology. A stock's gotten up this much, no way it can keep going. It's gone up this much. All right, now it's definitely done. And then it keeps going and going and going. So that's part of the reason that momentum works. It feeds off of irrational investor behavior. And that's what we are at the end of the day, we act irrationally in the market, and
Right.
momentum really eats that up. So
Well, you and
anyways,
I, Will and I'll get all jazzed up about when you see
oh,
this
we
type of
get
stuff.
yeah. Miles was joking. We're gonna like a Sharpie and like draw a bit momentum return distribution on the wall.
Yeah, it's all the way out here. That red
Facilities
tail
facilities wouldn't like that.
probably not.
Dennis would come in and have to scrub it off.
Oh gosh.
Yeah. All right. Anyways, I mean, NVIDIA, obviously the big spotlight. Anything else you want to say there before we kind of move on?
No, I don't think it's necessarily moving on. I mean, it just is like
True.
that's the good start. I was looking at the performance table and I was like, I think we might as well just add NVIDIA to the kind of weekly performance table.
Oh yeah.
Hey, how did we do? It's probably
Yeah.
up or down, you know?
Yeah. Miles and I do our like morning briefs in the morning, which I'm gonna plug. We like doing those. We get a lot of good engagement. We're gonna have to add NVIDIA in there
Yeah.
and all the other mega cap stocks because it is driving the core of the market. Like
Yep.
they really dictate where the benchmark is going to go, at least the cap weighted benchmark. So you kind of have to pay attention to them. All right, something else I want to mention. This is related. I put this in the report last Friday. It's like a technical earnings review, which is where we look at stocks, technical ratings on our system. If you're not familiar, we rate every single name from 0 to 5. 0 is the worst possible, 5 is the best. And then in this report, we're saying, okay, do these stocks perform better on earnings day than others? So does a 5 attribute stock, a technically strong stock, does it beat analyst estimates more often than like a low attribute stock?
Right. The idea is there agreement between the technicals and fundamentals?
Yeah. And I've seen people try to say too, like technicals will like lead fundamentals sometime. I don't know if this is concrete support for that, but the quarters that we run this, we typically do see high attribute stocks, so highly rated stocks on our system. That's 3 and higher, 3s, 4s, and 5s, typically tend to beat fundamental analyst estimates more often than low attribute stocks. To put a number to it, 73% of stocks when we ran this report, so it was about a week ago, not including NVIDIA now, 73% of the S&P 500 that were rated as a 3 or higher beat top line, so revenue, sales, versus 55% of low attribute stocks. So I think that's pretty significant. If you look at the NASDAQ 100, I didn't publish this, but it's actually more pronounced where high attribute stocks did even better compared to fundamental expectations. And then if you look at on earnings day, you're seeing high attribute stocks perform better than low attribute stocks. So this is, of course, some extremes, but a 5 attribute stock averaged a 70 basis point gain on its earnings day, but a 0 attribute stock averaged a 75 basis point loss on earnings. So there's actually some asymmetry of returns for attributes in their earnings on technical price, like price action, and on the actual beat rates.
You didn't run anything in there with like medians, did you? I'm curious to see if there was like some.
Yeah. I don't know if I did or not, to be honest. I didn't put it in the report.
Okay. Yeah, I was just curious.
Yeah.
I mean, you think like, okay, maybe there was somebody who really missed.
And just skewed it all.
I don't mean skewing all, right? But I mean, wonder what that looks like.
Yeah. I think I actually wanted the average too because of the opposite, like names like NVIDIA. Typically earnings can be a pretty big catalyst one way or the other. So are we seeing more of a magnitude of positive responses or more of magnitude of negative?
Yeah, I guess it depends on the way you want to look at it.
Yeah.
Either way.
But if you did look at median or adjacent, you could look at like positive hit rates. You did see high attribute stocks typically have more positive performance days than the negative as well. So anyways, just some food for thought. So NVIDIA was a 5 attribute stock going into earnings, certainly going to stay a 5 attribute stock after today. So that jives with kind of the overall theme that we've seen: high attribute stocks performing well and beating estimates.
Yeah, earnings this season really weren't too bad. It didn't seem like. With all things considered, from a market perspective.
Oh, sure.
There was plenty to like.
Yeah, and I think too, like there's always so much people have like hated the bull market run so far. So they've been looking for reasons to get out or to be bearish on the market earnings. I think some people were thinking that may be the case, but like you said, overall, companies have been really strong. Of course, we read some like corporate commentary that come through via email and people talking about strength of the consumer, of course, kind of flagging some concerns and being cautious. But overall, like you said, it seemed to be pretty positive.
Yeah, I was up in New York over the last couple of days. And Phil McIntosh, the chief economist for the group, he was in some of the meetings over the last couple of days, and he had some interesting charts as they always do. Shout out to those guys, really.
Yeah.
But one thing that he mentioned over some of his presentation was CEO confidence was waning, right? So consumer confidence is still very high, right? Probably because they're swiping their, Amex, as much as possible, but maybe CEO confidence isn't as high. I think because they're worried they're not going to be able to pass on as many costs anymore. I don't know.
Okay.
That's interesting.
Yeah, what Miles talked like Phil and his team is like the NASDAQ Economic Research Group. We put one of their weekly pieces in our report. Typically on Thursday evenings, it comes out. They always have some good charts, so maybe they'll talk about that a bit this week and next week.
Yeah.
All right, we talked about NVIDIA, talked about kind of the earnings and technical attribute rating stuff. Other stock updates, I'd be curious your thoughts on this. So Amazon gets added to the Dow. Is Amazon now like your grandma buy and hold, low octane, typical type of Dow stock?
Yeah, I mean, I wouldn't say that it's necessarily like your grandmother's stock, but I think it's about time, right? The Dow has been probably realizing that they're underperforming, over the last
year. We gotta fix this.
So get Walgreens out of there and maybe give it some more juice with something like Amazon. But they've been, changing over the course of the last decade. They added Salesforce in there, added Apple, now Amazon, right? So you're getting kind of more growthy names within the space. And all things considered, I think it's a decent ad. Anytime you see some type of larger index change, it's always of note. So
pretty notable, yeah. And I think we were talking before as well that this could be maybe more of a headline impact than actual Dow index impact, because remembering the Dow is a price weighted index. It's not market cap weighted like the S&P 500 is. It's a price weighted index. So the stocks with the highest price have the most say in how the index moves. So that's United Health is currently the biggest price. You got Microsoft as the second at $400. Amazon's like 170 or something like that.
Yep, 174.
174. So that's middle of the pack in the Dow. So it's not going to have some huge like pronounced impact on the Dow like it does on the S&P 500 cap weight. So I think that's something, especially like advisor, personal investor, when you're thinking about the Dow, thinking about what this means, I would keep that in mind. Probably not a ton.
Regardless of its impact, I think it's probably going to have a more positive impact than Walgreens. If I had to say,
Walgreens was a dog, let me tell you. When it was added June of 2018 at $62, and it was removed at about 25. So not the best addition. And this thing's been a low attribute for, forever. I don't remember the last time Walgreens was rated decently.
Yeah, that default chart for Walgreens is fun. What a like
horrible.
You haven't had successful follow through on a buy signal there. We actually really only posted 2 buy signals since 2000.
I remember, just personal, like if people read our like daily equity report, we put option ideas. I feel like Walgreens put was always on there.
Old reliable, old Betsy.
Old Betsy when it was always on there.
End of the day, you need something quick, just throw in Walgreens. It's only down 17% for the year so far. Sorry, if any listeners are working at Walgreens, don't come after us.
Yeah. All right. I think other like while we're on like the individual stock news, Capital One trying to acquire Discover. I think that was pretty big news for the market this week. Capital One 5 for fiber looks pretty strong technically. Discover also 5 for fiber at the time of the recording. We'll see if this goes through. Look, I remember seeing that the price of Discover actually didn't get to the acquisition price. So I think there might be some doubts about whether that's going to go through. That's not our place to speculate on it as a technical people here. But also on the individual stock front, Walmart, another name that beat earnings. This was a high attribute stock as well. So 3 for fiber had a pretty nice reaction, 3 or 4% bounce after earnings. And we're saying like, and I think we talked about this on a call. I don't know if you were on it. Like Walmart beating earnings, it's a bit of a staple. So does that suggest at all that? I guess any company beating earnings is probably a good sign. But like Walmart as a staple, is that a sign that shifting consumer behavior? Who knows?
It's possible, right? I mean, if we want to get more into like the economic side of things, which
We won't.
You know, we won't, but maybe I will for a minute. You sit there and you say, okay, hey, maybe you're just not going to Target anymore as much, or maybe
Yeah.
some of those kind of like higher or middle to higher end retailers, and
Yeah.
you're gonna go get your groceries at Walmart
True.
Instead. Because people, again, when you're facing a big credit card bill, like we mentioned before, each month, you know, you want to cut some costs to everywhere you can.
Yeah. Yeah.
So interesting. I don't know. I don't know where I stand on that.
Yeah.
If I had to
I
be
think
honest.
Joseph was bringing it up about like, oh, that's good or bad for the like broader landscape if there's any signal there. But as far as like technical signals go, the stock looks really strong
Yeah.
right now. I mean, it's like one of the best looking stocks, I think, in consumer staples. Costco has been another one. I just have to mention Costco. But yeah, Walmart's looked good for a while, still looks good now, a bit extended, but
Extended, yeah, but did pull back yesterday.
yeah, I think still actionable on on the pullback here. All right, where else you want to go other than you got any other individual stock stuff you want to bring up?
Mm, no.
No, no. All right, I think what do we want to do? Parting shot on like cap weight, equal weight
Yeah, I think
stuff.
that works.
Yeah.
And then that
You want to
kind
kick
of
us off
triples up with
there? Yeah.
with the core. Yeah, so we've
What's the
mentioned,
connection actually, first of all? Because like from what we talked about so far, like NVIDIA beginning and like now, like this like core equal weight. If you want to like set the stage there.
yes, this, well, I don't know if we're gonna go to the same direction. Where I was
Okay.
gonna go with
I'll follow
is
you
that
wherever you go.
this is a really hard time to be, I think, a financial professional,
Yeah.
right? An advisor, client facing, whatever it may be, because what the market is telling us right now and has told us for the last 52 weeks to about a year or so is the benchmark where the clients are looking, right? They see it as the on the news every day,
Yeah.
right? That's the strongest place to be, right? And so
Yeah.
trying to follow trends outside of the core is difficult to do. So you can't necessarily try to rotate away from that. It's a very difficult instance where we're saying the core of the market, what you're trying to beat each year,
Yeah.
that's the strongest to be in right
Yeah.
now. So point being, you look at some notable technical developments between SPX, so the cap weighted index, and maybe some of the more equal weighted stuff like SPX EWI on our platform, where every stock gets the same vote.
Yeah.
We're seeing some pretty close to notable changes. David and I mentioned that one last week. Will and I are going to talk about it again today. So
Yeah.
lots of stuff going on.
Yeah. Because you and David, I think, mentioned this last week at a like slower moving scale, so much longer term view. Miles and I were talking about this again about at a shorter term view. So that if you're on YouTube, we put this chart up. It's a 1% chart between the equal weight S&P and the cap weight at S&P. And this is at a this actually just broke below a 4-year low. We don't call this like support on a relative strength chart. We're not using that phrasing, but in terms of a place where you typically saw equal weight begin to outperform cap weight, that's been violated. And now we're still seeing cap weight outperform the equal weight here. We're only about 7%, maybe after today, about 6% away from reaching the November 2008 relative strength low. So that was the last time, November 2008. Again, 6% more of underperformance from the equal weight compared to the cap weight. Gasp for all the jargon I'm using. Another 6% of underperformance for the equal weight would put you at those November 2008 lows, which is, again, not an area of support, but that was the last major time in market history that we saw an RS calc fall this low. And then we actually saw equal weight finally begin to pick up some steam. So I do not think the equal weight is dead by any means. Over long periods of time, it's been the tougher benchmark to compete with. And I would still think it's going to be that case over long periods of time going forward. But for what it stands right now, like you said, it's really hard to do anything other than by the core of the market, cap weight stuff.
Yeah, a different way that I like to say this, and maybe just conversationally that you can have in your back pocket, it is relatively more expensive now than it has been
Sure.
in the last 15 years. At
Sure.
least when you're looking at this specific
Yeah.
chart, more expensive to buy relatively.
Yeah.
Cap weight over equal weight.
Yeah.
That's a charged comment.
Yeah.
Right.
Yeah. And you're not talking fundamentals whatsoever. You're
Yeah.
just talking about pure price outperformance.
Yes.
Yeah. That's a great way of putting it too. It's something that it hasn't shown any signs of turning around right now. The only way you could play contrarian is that you're just expecting like, hey, it's turned around here before, maybe it'll do so again. But we're still not seeing that. And today again, we're not seeing equal weight run away and outperform the market.
No, not at all. Not at all. And you're gonna be watching outside of, equal weight versus cap weight, small caps, Russell
Yeah.
2000 putting in its first consecutive pair of buy signals on its chart since the back half of 2023. So there's some maybe hope that we're starting
yeah.
to see some pickup outside of just the core. But for right now, I mean, I guess
Where
if
it
it ain't
is.
broke, don't fix it, right?
Yeah, and again, like what we started with, trends can go on much longer than
You think,
you think,
or you're comfortable
or
with.
you're comfortable with.
Yeah.
Yeah. That's the thing about momentum. Like, it's great, it's rules based, it's objective. It'll keep you in something longer than you're comfortable, and it'll keep you out of something longer than you're comfortable as well, which we've seen over time be a pretty good thing to kind of check yourself on. All right. Well, that's all the words I think I have for this week. You got anything else?
Not for me. What are you doing this weekend?
I don't have any plans. No plans. I need to run. Cassie and I.
Yeah,
Yeah.
marathon. How's
Yeah.
that going?
So Cassie signed us up for a marathon, which is like 26 miles, 26.2, I think.
Really? I didn't know.
Well, I had to learn because I'm not a runner, and people are like, "Oh, you're a runner." Like, no, I'm just running. Literally just running. I'm not a runner, but yeah, we're supposed to run like 13 miles this weekend, which is like a half marathon.
Yeah, you have plans.
I got plans.
Yeah.
That'll be my Saturday probably.
Oh man.
What are you doing?
Nothing.
If you see me around town and I look like blink 2 times, pick me up.
Okay, I will. You let me know.
Yeah, that's all I got.
All right, cool. Well, it was a pleasure as always, Will. And we will be back next week to chat about the upcoming week's action.
See you guys.
Cool. Bye-bye.